Hello everybody and welcome back to our Forex Rally webinars. My name is Răzvan Mihai. I'm certified as a financial technician. You already know me from the past webinars that I've already done for Forex Rally. So I'll go on and discuss, because time is precious, I'll go on and discuss about candlesticks secrets. Now, you would ask yourself, why would I learn about candlesticks? Now, I'd like you to forget everything you know about trading and start from the zero if it's possible. I'll tell you, why would you like to learn and understand candlesticks? First of all, it is very easy to understand and apply. This is very important. For me, it was a very important thing at the beginning when I started. And believe me that candlestick patterns were actually my first step in trading on the financial markets and especially Forex. The second one, increase the probability for a correct forecast. This is again very important. If you have a high probability of forecast, then you will make more money from trading, and everyone is actually looking for such a solution. They are highly used in both simple and complex trading strategies. Now, this is again important because you can use them as simple as that. You just take the candlestick pattern and use them with a simple support and resistance that we already talked about in the previous webinar, or you can combine them with Fibonacci, with Dow theory, with Elliott waves, or with Gann and so on. So you can start with a simple strategy and tune it to become a complex and a high probability strategy. Another thing would be that it helps you understand what is the market player sentiment. And we'll talk about this because you need to visualize. You will actually need to see what is it about and how you can read the player sentiment. It works on every time frame. This is very important. It doesn't matter if you are a scalper, it doesn't matter if you are a guerrilla trader, or you are a position trader, or you are an investment oriented person. You can use candlestick patterns to trade on different time frames, starting from 1 minute to 1 month or more. And another good thing about candlesticks is that they are working on every trading instrument. If you like to trade gold, you can use candlestick patterns. If you are a Forex guy, or you are a Forex trader, you will for sure use candlesticks. If you like to trade, let's say, stocks, Apple, Microsoft, or so on, you will use candlesticks. If you like to trade, let's say, ETFs, or if you like to trade on binary options, you can use candlesticks patterns to give you signals, and after that trade on binary options. You have so many instruments on which you can use these candlesticks. Now, let's go on and see the agenda for today. We'll discuss about the candlestick chart. I'll show you how it's made, and we'll see some live examples on the trading platform. We'll use tonight, as in the others webinars, the X station, because it's very easy to use. It is online. We have it everywhere. It also has a very nice app, and you'll hear about that when you'll be talking with your account managers. So we'll use X station, and I'll give you live examples of how a candle it's drawn, and how we can use candlesticks and this kind of charts. After that, we'll be discussing about patterns. I wrote here a few patterns like hammer, shooting star, Morningstar, Eveningstar, bullish engulfing, and bearish engulfing. We'll have 3 bullish signals given by these patterns and 3 bearish signals. I'll show you how they are drawn and how you can trade on it. I'll show you also how can you set a stop loss, and how, and this is very interesting because it's not that easy to find how to set a take profit. Now, if there is a drawback of these candlesticks, they usually don't give you a take profit level, but you can actually go around it and find some from the price action or use the money management, and I'll show you how. Now, let's go on and discuss about candlestick chart. A line chart would mean that we will have to connect the closing, let's say the closing price. In this case, we have closing prices for specific time intervals, time frames. Let's say we have 1 hour time frame, and for each end of the hour, give me an example, 59.59, so 59 minutes and 59 seconds, the that hour will close with a price of 100. The second hour will be 110, the third 107, so on and so forth. We can see 120, 19, 125. After that, the price starts to drop, and at the end of an hour, it will be 117, 19, even less, 100, and now we are back from where we started. 109 and all the way back, all the way down to $95. Doesn't matter if it's a share or if we are talking about oil or gold or so on. So the idea is, if we connect these points, we'll actually have a chart looking like this. This is a line chart. Now it's good for us because it shows us the trend, the direction of the trend. We can see here that we have an uptrend. We can see on the right side of this chart that we have a downtrend, and that is why I draw the line with red. So blue is usually used for an uptrend, or green or white depending on the type of the platform that you have. If you are using MetaTrader, then you'll most probably have black and white, or green and yellow, something like that. And if you are using Xstation, you'll see blue and red, but there are other platforms where you can set them to be green and red or green and white or whatsoever. The important thing is to set it the way you like it, so it will help you visually. Now, let's go on and talk about candlestick charts. Now, it is important for me because it gives me and it gives the trader more details regarding the price movement. And this is very important because if you have more details regarding the price and what it did in a specific time interval, then you can actually have a higher probability of forecasting the future movement of the price. Now, talking about technical analysis, but you can combine this technical analysis with fundamental analysis or sentiment analysis. Let's go on, and now I will show you how a candle, so this is not a pattern, how a candle is actually drawn. And I'll show you the differences between up candles and down candles, or ascending candles and descending candles. Let's take the first example from here. We have an open price. Let's say that it is 100 because we had this in the previous example. We have an opening price of 100, and after that, during 1 hour of trading, I'm talking now about time frames. So we can change the time frame from 1 minute to through 5 minutes, 15, 30 minutes, or 1 hour, 4 hours, a day, a week, and a month. These are the standard and the most used, but you can have custom time intervals, time frames. We talked about time frames, and I explained them in the previous webinar about introduction to technical analysis. If you like to learn more about, if you didn't get a chance to see it, please talk to your account managers. We have recorded the webinar, so you'll have access to it. Or look on the Forex Rally YouTube channel. I believe that it is already uploaded there. Now let's get back to our chart. We have the open price, and during 1 hour, I'll take this as a benchmark. During 1 hour of trading, we will see that the price moves up and hits a high, and after that goes back and hits a low. At the end of that hour, so 59 minutes and 59 seconds, we will see that the price will close. And it will close, let's say, at $95 per share. We take this example as a share. Now, between the open price and the close price, we will have a body. This is the body of the candle, and it will be red or black or what color you set it to be. If it is descending, but usually the default is red and black, so it will be red and black if the candle is a descending candle, and the blue one if it's increasing, and we'll talk about it right away. So this is the body of the candle, the red one, and these are the shadows. The idea is that depending on the size of the body of the candle, depending on the size of the upper and the lower shadow, we can set up some patterns, and I'll show you what are the most important patterns, how you can recognize them, and especially how you can make them give you signals, good signals with high probability for your trading strategy. Now let's get back to our second type of candle. This is a descending one, so you'll find it in red and black as I told you. Now, let's say we have an open price around here. Let's say it's 95. After the opening price of that hour, I remind you, we have the benchmark 1 hour as a time interval, as a time frame. We will see a low hit here, and after that the price rallies during that hour and hits a high. After that, 59 minutes, 59 seconds, the hour closes at, let's say, $105 per share. So now we actually have a closing price higher than the opening price. In the first case, we had opening price higher than the closing price. And this is how the body is created for an ascending candle. This is an ascending candle. We have the closing price above the opening price. And here we have the closing price below the opening price. And we also have the upper shadow and the lower shadow. Now, these shadows are also considered to be the emotions of the traders, depending on the length of the shadow, the emotions of the market. So the most important thing from a candle, or let's say if we are comparing this type of chart with bar type chart, so open, low, high, close, you'll find it like this, OHLC, or open, low, high, close, or bar chart. So if we are comparing to it, then there we will have to take out this part of the opening price and this part from here. So we will have a bar looking like this. Now, that's about it regarding charts. Let me show you, candlestick charts. Let me actually show you on the platform how it's made. Now I have a 50 minutes chart. What does this mean? That the candles from here, it's drawing in during 15 minutes. But I can change the time frame, let's say to an hour, to have the same benchmark. So each candle here, it actually shows me what happened in that hour of trading. So let's say the current one. We have an opening price, and let me take the crosshair. We have an opening price of 149.64. The price went a bit down and touched a low at 149.44, rallied all the way up to 49.65, but we will have to wait and see what happens at the end of this hour. So it might close here 149.57, or it might go a bit down and see a red candle. Now for a better example, let's get back to a 1 minute chart. So each candle here actually shows us what happens in 1 minute of trading. At this point we have an ascending candle because it is blue, because the current price is actually above the opening price. But we had red candles. This is the closing price, it's lower than the opening price. Reading these candles, we can say what are the emotions of the traders, who is actually having the power. Let me show you for a practical example. Here we had a drop, and we can see that we have like 1, 2, 3, 4, 5 candles, 5 candles, red candles. This showed us that the price was dropping, and it hit a support. The support that was given by these two highs here. We talked about support, as I told you in a previous webinar. Now after that, we can see that the price started to move up. So bulls took over the power. We can see that now we have 1, 2, 3, 4 candles which actually exceeded the level at which the price started to fall. So 4 candles needed to cover the 5 candles drop. This means that bulls are actually more powerful than the bears in this case. So if I would have been here, this is the resistance. The price stopped for a bit, 49.47, but seeing that 4 candles actually covered the 5 candles drop, I would have thought that there is a higher probability for the price to continue to rally and get a bit higher than that. Look another example. Look how many candles it took for the price to fall. But if we are going to highlight, and let me find this. So let me highlight only the section with the falling and the rising. We have 1, 2, 3, 4, 5, 6 candles of falling prices, and after that just 3 candles covering the fall. This means that bulls are stronger than bears at this point. So bulls actually are controlling the price at that moment. So the probability was higher for the price to continue to rise to another higher high. Now, and this is what happened. This is how you actually understand the market sentiment. You can read the emotions of the trader, and you can actually not guess but know what would be the next direction. This is one, reading the sentiment. But now comes the interesting part, and I like to talk to you about candlestick patterns. And this time I like to do it a bit different. And let me show you why I'm saying that I will do it a bit different. Because I will actually take the PowerPoint presentation and show you my next slide. It will be very funny. So if you click, if we finished about this, so you guys, if you have questions and you'd like me to answer to your questions during the webinar, it is no problem. It will be no problem. Just ask me, use the question box. I'll see it and I'll answer to you. It is way better like this than waiting for the webinar to end and maybe we'll forget, or maybe we will talk about something else and it will be a bit difficult then, or not that comfortable as it would be now. So if you have questions, please type in the question box and I'll answer to you live. So you can ask me almost everything. I'll try to answer to almost every question, especially if it's regarding the webinar and our theme from today. Now, let me show you the next slide. The next slide, it's about hammer. Now, I don't have anything on this slide because I would like to be a bit more interactive and I would like you to use your imagination. So, for me, it will be easier to show you live how a candle is created than actually giving you a slide and after that going back to the chart and so on. Oh, let me show you what happened to the... Now we have descending candles and this is quite big and interesting. So the price stopped at the resistance level, it dropped afterwards under the support, and now it seems that it is retesting a next resistance is 49.47. If it breaks 49.47, it will go down. And looking at these candles, I think that the price can easily hit 49.40 or maybe the next support at 49.40 around here. But we will have to wait and see. Now, getting back to our charts and what I was telling you about. Now, some secrets regarding these candlestick patterns that I am talking about. The most important thing is that you will have to remember regarding candlestick is like this. Candlestick patterns are actually reversing moves and not trends. A trend, it's actually a price pattern, so it takes a lot of time to build that trend and especially to reverse it. So a candlestick patterns will tell you that a move, which can be up or down, will is highly probable to be reversed, not a trend, a move. This is one. The second one, you cannot have a candlestick pattern, especially those that we are going to talk about, somewhere. We need to look for certain conditions, and those are, now I'm going to tell you, and I'll like you to be very attentive. Of course, you will be able to use the recording and watch it over and over again. So, or if you like, you can send me emails on research@forexrally.trade. I'm using this address. The Forex Rally team gave me this address so I can be closer to you guys. Now, the thing is like this, and I'll make it as practical as possible. Let's say that we have a descending move, so a drop in the price. This drop here seems to be heading towards a support. Now, we are talking about hammers. So this is a candlestick pattern, and this is actually a bullish candlestick pattern. It shows us when the price might reverse from down to up. The direction of the price might reverse from down to up. So we have a descending pattern, and we have a support here. I've showed you types of support. Now, if we will have an opening price, it doesn't matter the time interval, the time frame. We can take 1 hour, 5 minutes, 15 minutes, 1 day, 1 month. So as I told you, the candlestick patterns are working on all time intervals, time frames. In 1 hour, the price will actually drop all the way here, and it will reach a high around here. Now, if the price will close above the opening price, we will get a candle looking something like this. This is an ascending candle with a very low upper shadow or wick and a very long lower shadow, or if you want, you can call it also a wick. So the conditions for this candlestick pattern are, and now I like to just write it down a bit. It will be easier for you guys to have them. So one of them is, it should come, and this is very important. This is something that I will not repeat for the bullish and for the bearish patterns. I will write it now, and I like you guys to remember this because this is one of the most important. Should come after a drop. Something happened to my mouse. Okay. So it should come after a drop. This is very important. So you cannot have it in a sideways move. This hammer will not work, and it will not give you a high probability of success if you are using it in a sideways move. You need to have it after a drop, and its low should be the lowest point of that drop, because I encountered some difficulties when I was a beginner in finding these patterns because nobody actually told me all of these. You can look and find on the internet, but they are like, this is a hammer, this is how it looks, you should find it on the chart. No, if it's somewhere on the chart, it will not be as good as if it meets these conditions. So it should come after a drop. Don't worry, this will be the longest because the others will come really fast because you already know the concept and how it's working. and we'll go a bit faster through the others. So should come after a drop. Another thing, the body should not exceed, I would say, 25% of the entire candle. Let's have it like this. So the body, this is the body. The body for the hammer should not exceed 25%, or we can go up to 30, but the smaller the better, 25% of the entire candle. Now another thing is for the up shadow to not exceed, or let me make it easier, to be smaller than, I would say, 5% of the entire candle. This is very important. The smaller the upper wick, I really like it very much when it is missing. So no upper wick. The high of the candle is actually the opening on the, or the closing price, because now another condition for it, this is actually a good one. It doesn't matter what color sorry, doesn't matter what color the body is. Oh, come on. The body is. Now I'd like to keep in mind this, because for hammer shooting star, the color doesn't matter. It can be an ascending candle like this one, or it can be a descending candle like the one I've showed you. So it is actually possible for this body to be red. So the opening price can be up, and the closing price can be down. Good. That's about it. When we see something like this, we can trade this pattern. Now let me show you how. First of all, we should wait for the candle to close. So we should wait for this to be confirmed, and the confirmation comes with a closing of the candle. Oh, by the way, let me show you guys something very interesting what happened to the price. So the price fell. As I told you, I was expecting for it to go towards 49.40. That's why I put it here. It was pretty close, and now it seems that it wants to get back to 49.54, and it might retest it. This is actually live analysis and forecasting for you guys. I don't usually do this in other webinars, but it seems that I made it several times during the Forex Rally webinars. Let me get back to our presentations here. So, as I told you, now should come after a drop. This is very important. Body not exceed 25 or 30% of the candle. The up shadow should be less than 5% of the candle, or as I told you, I like it to be to not be there at all, and it doesn't matter the color of the candle. Now, when this happens, at the next opening, you can set a buy. So this is a buy. You can set a stop loss, and this is the theory for candlesticks. The stop loss will go under the entire body of this hammer, and after that, take profit. And this is very important. The take profit, usually in this case, if we don't have anything else around us, is at least 1.45 times the stop loss. So if we have, let me take another. So if we have this is the price that we are actually paying. If we are getting it wrong, we should look for this and another half more. So this is actually how trading is done. You will actually want for the market to give you more that you are risking. This is very important. Good. So buy here, take profit here. I like to draw a line for you guys to see where it will be, because I will not repeat it for every slide. And I will also put here, so this is a take profit. This is a buy at the opening. So opening, not closing. Be very careful. You need to have the price, the next candle, to have the opening price already. Wait for the closing price. Let me move this a bit up. And here we should set the take the stop loss, sorry. So stop loss down here. Good. Now we set also the stop loss. So this is the strategy. This is how it is a normal strategy for trading the hammer. Oh, look at what happened. The price went above 49.54 and it looks like it's ready to go get back to 49.65. It's so nice. And this is 1 minute chart analysis based just on support, resistance and candlestick patterns. Let's go on and show you, for me to show you the shooting star. The shooting star is very nice because it is as easy as the hammer. You just need to understand that for the shooting star you will need an ascending move. After that you will have an opening price. You will have during a 1 hour price movement like this. Let's say the opening price is a bit lower, and after that we will have a closing price around here. So, or make it a bit lower to make it even more interesting than this. So this will actually look something like that. We have a blue body, so it's an ascending candle, but it gives you a bearish signal. A bearish signal means that we are expecting for the price to drop from here. This is the highest point of the move, and we are expecting for the price to drop. Now, it is pretty much the same. We sell here, we put the stop loss 1-2 pips above the shooting star. So it seems like this one was deleted, and we are putting the take profit somewhere 1.5, at least 1.5 times the stop loss. Oh, look at what nice. I'm sorry guys, I cannot stop doing this because the graphic, it's so nice. The candlesticks are telling us a lot of things, and it seems like GBP USD, it's going the right way, and it's going to hit another high, and this is really but really awesome. Now, so sell here on the next opening, stop loss above the candle, take profit at least 1.5 times the stop loss. Let me write down the conditions for it. So we will need to have up move. This is available for all bearish. This is a bearish candlestick pattern. So we need an up move, and after that we need to have a body which is less than 25 or 30% of the candle. That's good. We need the lower wick, in this case lower shadow, to be less than 5%, or as I told you, it's available for shooting star 2 to be missing. And what do I miss? Oh yes, it doesn't matter the color. Ooh, I did a boo-boo. So the thing is that I actually put shooting star to Morningstar, but I'll just have to put here Morningstar and everything is good. This is what actually happens when I am trying to do something else. So it happens. It is supposed to be like that. Doesn't matter the color. Now, this is the shooting star. So up move, shooting star here, trade on the next opening, and after that set the stop loss above the shooting star, take profit at least 1.5 times bigger than the stop loss. Let's go to Morningstar because we have some more patterns and time is running and it's running too fast for me to catch it. So Morningstar, this is actually a bullish pattern, so we need a support. It's very important to have a support here, and after that a down move, again very important. At this support now it's getting interesting because the Morningstar, it's not only one candle, it is actually a group of 3 candles. The conditions here are something like this. We first need to have a descending candle, so a red one. I'd like to make it red. So we need a red candle. After that, we will need a spinning top or a doji candle. A doji candle, and this is something I didn't get to tell you about. A doji candle is actually a candlestick which has the opening price at the same level with the closing price. So it shows you that the buyers and the sellers, or if you want you can use bulls and bears, are actually equilibrated. Their power is equilibrated at this point. So closing price equal to the opening price, and this is all you need to know about doji. Now a doji candle, this is the perfect morning star, and after that we will need a rising candle. So now I'll tell you again from my experience what are the most important characteristics that this morning star should actually have. After this we are expecting the price to start going up. Now trade on the opening of the 4th candle, so this is the 4th candle, open a buy position, set a stop loss under the entire set of candles which actually makes the pattern, and set a take profit 1.5, at least 1.5 times the stop loss, or you can use another resistance here or a Fibonacci level or something else, so you can combine the candlestick patterns with something else. Now enter the trade on the next opening, stop loss, take profit. Let me write down the conditions for this. So don't forget, down move, red candle, descending candle, doji or something like this, and after that an ascending candle. The most important for this in trading Forex, because you now for this type of candles you actually get to have different conditions depending on the instrument. Let's say if you trade stocks, then something else is added there, but we'll not discuss about trading stocks using candlestick patterns. Here we'll be discussing about how to trade Forex using candlestick patterns, and because the liquidity in this market is high, the conditions were a bit reduced, and this is a very big plus for traders. Now, one of the most important things you will find in the trading books or on the internet, that the blue candle, so the ascending candle, should exceed at least 50% of the red candle. Now I'm telling you that from my point of view, the most powerful candlestick pattern, it is actually the one which candlesticks in this case, which has the ascending candle bigger than the first candle from the pattern, so bigger than the red candle. Ascending candle should be bigger than the descending first candle. Why am I writing this down? Well, maybe some of you will look over the webinar and or some others will look over the webinar and it will be easier for them to have something visual also. So this is very important, and for me it's very important. This is the way I'm teaching in my live seminars or some other type of webinars. I hope that it is very helpful to you. And I would really like you to send me some emails, feedbacks on what do you think about these webinars, if the information is good for you, if my presentation is okay, or if you'd like me to change something, or if you have ideas of other themes, even though this is only the start. We are doing now introduction to technical analysis. We'll be talking about fundamental analysis in a short time, over 2 webinars. We'll be talking about money management, and I really would like you guys to be there, because money management for me, and from what I've talked with other traders, it's one of the most important tools a trader actually have. So let's get back to our Morningstar. This is the Morningstar. The most important condition for a Morningstar is to find itself, actually it's for the blue candle to be bigger than the red candle, and another, and I highlighted this in the beginning, that we need to have a descending move and the low of this candle here, the middle candle, to be the low of the entire move. Now, let's go on and discuss about the evening star. Now, the evening star, it's actually the morning star, but on the opposite side of the chart. We will have a rising move, we will have a resistance, and now we will actually have an ascending candle, a doji, Doji can take different type of shapes, so don't worry if it's the open and the low, it's closer to the high than with the low than to the low, because it can be the other way around, closer to the low, not right in the middle. So this is still a doji, and after that a descending candle, which is actually having a bigger body than the ascending one. So this is the descending. Let me change the color. And this is actually the ascending candle. It can even look like this with a very small up shadow and no down shadow, no lower shadow. This is also, and let me make it a bit bigger to look like the third candle here. So now we have this bigger than the first candle. It engulfs the first candle. This is the evening star. It finds itself after an rise in the price near a resistance or over a resistance area, and the third candle is actually bigger than the first candle in the pattern. That's about it for the evening star. How can we trade it? Well, in the same way I told you. If you get it from the start, like how you can trade a hammer, you can actually use the same theory for every other candlestick pattern. This is why I told you that it is very easy to understand and very, very easy to apply. Now, sell on the opening of the fourth candle, put a stop loss above the entire pattern, and set a take profit at least 1.5 times that you set the stop loss. It would be even better if you'll set it 2 times the stop loss or 3 times the stop loss, but you will have to look at the market, see the sentiment, see if there is potential in that move to go all the way to 3 times your stop loss. Now, this is it. I'll just write down for you to have it. The descending candle to be bigger than the ascending one. Did I wrote it this way? Yes, I did. So my memory is not helping me here right now. So this is one of the characteristics of the evening star. Now, let's go on because I wouldn't like to waste your time. This is very easy, and as I told you, I'd like you to send me some questions. If you have any on the email address I've told you already, research@forexrally.trade, or talk with your account managers, and after that we can discuss more depending on what you are interested to find out. Bullish engulfing, this is a very powerful candlestick pattern. I really like it. I like it very much. This and the hammer is one of my favorites. Also shooting star with a bearish engulfing, about which we will be talking in the next 5 minutes. So bullish engulfing, as it is written in its name, it's a bullish candlestick pattern. We have the support. We have the descending move, a very important thing, descending move, and after that we will have a descending candle. This candle should be red, so we need to see a descending candle. I'll change it to red, and the next candle should be a big blue ascending candle. The name engulf comes actually from the fact that the blue candle, the ascending one, is engulfing the first one. This is very, very, very important. So we need the second candle to actually engulf the first one. The trading method, again, trade on the opening of the next candle, set the stop loss below 1, 2, 3 pips below the pattern, and set the take profit 1.5, 2 times higher, starting with the opening price, higher, 2, 3 times the amount that you've set for the stop loss. So let's say, let me give you an example. If you set for the stop loss 10 pips, you should actually put the stop loss 15 pips away of your entry point. Or if you set it, because in Xstation this is a very nice thing, you can set the stop loss in money. So if you set it to lose $100, you can actually set the take profit to win $150 or $200 or $300. So it doesn't have to be in pips. Although for me it's easier to have it in pips, and it works different at the psychological level. Now, this is the way how we can trade this candlestick pattern. The idea is that after this there is a high probability for the price to start rising, and as a condition the second candle should engulf the first one. This is the main characteristic for this pattern here. Now, the last candlestick pattern in this series is actually a bearish engulfing. This shows us that the price actually moved up. We have here an ascending candle, and after that a descending candle, which is actually bigger. So we have the ascending one. Let me change. Sorry, forgot to double click it. We have the ascending candle and the descending candle. This is the blue big one. I put them a bit too close, but there is no problem. This is the best thing about PowerPoint. You can adjust it really fast. So we have rising sorry, I messed up the colors because this should be blue and this should actually be red. The other way around, as I said it before. We need to have an ascending candle and a descending candle afterwards, which actually engulfs the first one. So, as a rule, descending candle should engulf the first ascending candle. Good. This is the rule. After this, we just need to wait for the next opening, sell here, put a stop loss here, and set a stop loss, take profit, sorry, around 1.5 times, at least 1.5 times bigger than the stop loss. So for you guys to have also an example for a sell, I'll put here a sell, put here a take profit, and I'll set here a stop loss. So this is actually the trading method for a descending or a bearish pattern, candlestick pattern. So guys, do you find it difficult? Oh, I thought so. It's not difficult at all. It gives you high probability trading. It helps you enter good trades, better trades than you did before. It is easy to apply. You can apply them on any time frame. You can apply them on any instrument. It doesn't matter if it's GBP, USD, USD, JPI, Euro, USD, oil, gold, or even stocks. But at stocks, because the liquidity is not that big as in Forex, some other conditions appear for these candlestick patterns, and I'll do a special webinar at some point if you guys are interested in trading stocks using candlestick patterns, and I'll tell you about what the differences between trading on Forex and trading on stocks. Good. So these are the most important that I am using. So I'm not there is a book with like 8,000 candlestick patterns. 1,000. But nobody uses 1,000. I gave you guys in 40 minutes, actually 53 minutes now, of webinar, the most important 9 candlestick patterns that I use in my day-to-day analysis, that I use in my day-to-day trading. So why would I give you 1,000 or 100 or 50 or 20 if I personally don't use them? So I like to give you guys what's best and what's working for me. This is my only scope, my only argument, and my experience is actually my business card. Now, this is about it. Tomorrow you'll have this webinar already on the YouTube channel of Forex Rally Team, so go and take a look there. And again, I'm asking you to give me feedback on my email address because I like to improve these webinars for you guys. I like to make them better and to make them according to your needs. Do you need more advanced materials? Do you need more advanced information, intermediate, or we can go on with some basic stuff like this? I can show you some other things. And don't forget, next week on Tuesday, we'll be talking about indicators. So how we can use indicators to trade, how can we use indicators to increase our probability. Now, one of the most important things after watching such a webinar, and I'm telling you guys what I did. I was reading books or trying to find information on the internet regarding technical analysis around 6 to 7 years ago. But what helped me the most after reading or looking at the webinars was trying it out. So I took the information and I added it on the chart. I tried to find those candlestick patterns. It's very important for you to try to trade on those candlestick patterns, on those strategies on a demo account. So don't go and open real right away. It is very important to open a real account and test your capabilities on a real account, but the first step as a beginner is to open a demo account and trade as much as possible on that demo account. It doesn't matter how much you win, it doesn't matter how much you lose, you just need to trade and get the information settled so that at some point if someone asks you about a candlestick pattern, you'll know what it is, where you should find it, how it looks, and what probability it gives you for your trading and if it works for you. This is how trading works. Trading is a business. So you need to know that business. You need to know how you can improve that business to get higher incomes, to get bigger profits in your pocket. Because if you don't look at it as a business, then it might not work for you. So try to learn the business, and after that you'll be surprised that it can bring you some extra incomes. You can trade half a day, you can have it as a full-time job, because I know traders that are full-time traders, but I also know and do coaching with traders who are actually doing this as a part-time. So they are doing their analysis, they have a simple strategy, apply it on the chart, and after that trade for extra incomes. They have a job and doing this too. This is why uh, many nowadays are heading towards trading, day trading, or even investment. If you don't have time to learn a bit about the business and control the business, then think how you can invest in something like that to get extra incomes, to get passive incomes. Now, that's about it for today. I'm really glad that I've seen you guys again, and as I told you, don't forget that next Tuesday we'll be talking about indicators. Don't miss the webinars, because the best things at these webinars is that you can actually ask questions and we can actually interact. Now, again, that's about it. Thank you for being here. Thank you for attending this webinar. My name is Rozvan Mihai, and I'll be waiting for you next Tuesday at the same hour. Have a good night.